Good morning, everybody, and welcome to KickStart, the Specialist Finance Webcast with myself, Nicola Firth from Knowledge Bank, and Joe Breeden from Crystal. So it's a little bit cooler this morning, but we've got some pretty cool news for you. So let's get kicked off. So in terms of the weekly criteria summary, so we had 207 criteria changes last week even. That was down from 276 the previous week. So things do seem to be quietening down, but we do think there's a little bit of a calm before the storm. We still think that lenders still have a lot to disclose, shall we say, in terms of what they're going to do about different parts of lending criteria on the back of the coronavirus and the changes that they made. So relatively quiet, but some significant changes, not least that Scotland and Wales have relaxed their lockdown restrictions. So that's meant that lenders can start doing physical valuations in those areas, which is fantastic news, and what we saw happen in England and the way that kick-started things. So that's really, really key to brokers if you're in Scotland or Wales. We've had a few more LTV increases from smaller building societies, which I will come on to now, but the specialist lenders have been a little bit quiet this last week. So we will see what happens there. So to start running you through then, so the highlights from last week. So Accord Mortgages, they told us that they've introduced new porting products up to 90% loan to value, and that was to reward the loyalty of existing clients. So they'll also now pay brokers a prop fee on the full balance of a portability case, and that's the top up and the original ported balance as well. So you will get a prop fee on that. So that's great. So that does give you something at 90% as well. You remember Accord have also got the first time buyer product at 90% as well. A couple of options with regards to products there, but just specifically for first time buyers. And if you remember from last week, only one of them actually needs to be a first time buyer. It doesn't need to be both people if it's a joint application. So that 90% is still available. Family Building Society brought back its 95% loan to value mortgage deal for first time buyers. So that is great news. That the family support mortgage requires borrowers to have a relative who's willing to use their savings or their own home as security. So it's quite detailed if you want to have a look into that. But if anybody has, if they've got a relative that's got cash in the bank as savings, if they've got equity in their property, it's a way that they can help them without actually giving that away or having to remortgage to pull the equity out. So definitely worth a look at that. So Hanley Intermediaries, they've said that anyone who's been on a mortgage payment holiday will have to have resumed normal payments for a period of 3 months before they can apply for a mortgage with them. And this needs to be verified by using their last 3 months bank statements. And the other thing that they told us last week as well is that they're no longer going to accept self-employed applicants with just 1 year's accounts until further notice. So that's a bit of a loss, because we only have a handful of lenders, as we know, that will accept 1 year's accounts. And Hanley just pulling back for that, certainly for the minute anyway. Leeds Building Society, they've increased their maximum LTV for help to buy to 85% on remortgage only, while their maximum LTV for shared equity has increased to 85%. Their new build maximum loan to value remains at 80% though for houses and 75% for flats. And then we have Monmouthshire Building Society that re-entered holiday lets for individuals and limited companies. If anyone caught our webinar last week with Precise and Roger Morris, some really, really interesting news around the sort of taxation on holiday lets. So, and that could be something really good for clients to get into this year, certainly this year, maybe next year, with staycations being all the rage. Certainly that we can see that's holiday lets, I think, are going to be pretty well booked this year, so a good investment definitely. And then we have Skipton Intermediaries. They've updated their approach to self-employed applicants, so there's quite a bit of information on that, so I'll not go into that. We'll update you on that after, or you can have a little look on Knowledge Banks. There's quite a lot of information there as well. Oh, sorry, I've just realised, going back was Marsden Building Society. Sorry, I've just missed them out. I do apologise, Marsden. They've increased their LTV, standard residential LTV to 85%, and their expat LTV to 8%. So moving on, Gatehouse Bank. Now they have increased their what they call it finance to value, it's LTV, to 75%. That was up from 65%. And they've also announced that following the resumption of physical valuations in Wales, they're now able to finance residential properties in Wales up to £5 million for buy-to-let property and for 2.5 million for home purchase plans. And in addition, physical valuations now mean they can offer finance on a wider range of properties in Wales, including flats or apartments above 6 stories, properties with large acreage and multi-unit freehold blocks. Also new builds and apartments, that they're absolutely fine as well in England, above 6 stories. And again in England, the maximum finance amount is £5 million, 750,000 in Wales. So Lend Invest, they have reintroduced 75% loan to value products for standard HMOs. So cases up to 6 bedrooms with rates across 2 and 5 year products. Their minimum property value for HMO cases has been reduced. So that now starts at £250,000 for Greater London and £100,000 for the rest of the country. So large HMOs and MUFB cases with properties up to 10 bedrooms are now also being accepted. So that's fantastic. So Platform, they are relaunching, should I say, a limited number of 90% loan to value mortgages in England and Wales. So they came in, the ones in England and Wales came in on Friday, that was the 26th of June, and Scotland, they're going to be available from today, 29th of June. We saw Precise Mortgages increase minimum loans on resi and buy-to-let. So a couple of things then. So the minimum property value across residential and buy-to-let mortgages have been reduced to pre-COVID-19 levels. So the minimum property value is now £50,000 or £150,000 in London postcode districts. And the HMO minimum property value is now £100,000 or £250,000 in London postcode districts as well. So that's good, positive news. Roma Finance have launched a holiday let. So again, it's interesting to see this with the holiday lets. I think that everyone's sort of cottoning on to the fact that these are going to be good little earners this year. And they've relaunched a holiday let and serviced accommodation product. So the product's available up to 70% loan to value with a maximum loan of £500,000 on both repayment and interest-only options. And they have said, so Roma Finance have said they will allow the borrower to top slice rent from other provable income due to income on holiday lets potentially being seasonal. And they've also said that each case will be underwritten individually. And then we have United Trust Bank, so they are completing automated valuations up to for loans up to £1 million and that are below 55% loan to value. And then just a bit of a summary, so talking about Scotland, so physical valuations now in Scotland being recommenced. So we have Aldermore, Canada Life, Interbay Commercial, Leeds Building Society, the Melton Building Society, Mortar Life, Nationwide, NatWest, Precise and the Mortgage Works. So they're all back to physical vals. What you'll find is quite a lot of those are also running the desktop valuation model in the background as well, just to help try and clear the backlog. So if they are still able to do it on a desktop valuation, that they will. So finally, just to finish on some good news, so we saw a story last week. So research conducted by Moneyfacts found that despite the total number of mortgage deals reducing in March, percentage-wise, out of the deals remaining in the market, more offered incentives such as free valuation, cashbacks and things like that compared to the previous month. And they also highlighted that the average mortgage product fee had fallen slightly during the same period. So that's really interesting. So again, just trying to get things moving along a little bit. So HM Revenue and Customs data release shows that less than half the number of residential properties were sold in May compared to a year ago amid the coronavirus lockdown measures. No surprise there, although the numbers were actually up slightly following a record-breaking low in April. So that's, I guess, you know, we're not necessarily comparing apples for apples there, but we have seen that massive influx sort of post-lockdown. So they're saying that despite these figures, confidence in the housing market now appears to be strong, at least in the short term. The emphasis on property type has switched, though, with potential purchasers in the young professional and young family categories prioritising properties with garden and space to work from home. And that's really interesting. I think we are probably going to see different requirements coming through. Of course, we're not sure what's going to happen in future, but having seen a lot of employers say that they're happy for now people to work from home, then you can see that that may well become a requirement for people. So yeah, certainly seems to be strong. We're hearing that brokers are really busy. Certainly the number of searches on Knowledge Bank are up. And just before I hand over to Joe, just to remind you as well, we have the second of the Precise Buy-to-Let Specialist webinars this week. That's on Thursday morning at 11 o'clock. You can register for that. We have, we'll send you an email out with a registration form. Last week it was fantastic, and for anybody who attended, you don't have to have seen last week's to do this second one. The next one is specifically focusing on taxation and the treatment of buy-to-let. So really, really great information. And if you've seen Roger Morris present, he's excellent. So I'm going to hand over now to Joe, and he'll give you some updates on cases that have gone through this week.
Yeah, thanks very much. I mean, again, it's quite surprising how few changes there were last week. I think everyone was basking in the sunshine rather than working on product criteria for once, which actually give us a bit of a break to try and write some business, which is also great news for the industry. Look, as you rightly say, that there's absolutely, without a shadow of a doubt, a load of pent-up demand from the buyer side. Where I think the housing market lacks a little bit is a shortage of supply. So I think it's a great time if you're selling. You're probably going to get your asking price, and I think buyers are all going to be clamoring over what little stock there is available in the market, and potentially we might see a bit of a reversal of that towards the back end of the year. In terms of new business, again, just working our way through all these, we must have talked about 2,000 criteria changes in the previous 4 weeks. So getting our head around all these different criteria changes in the specialist sector and actually seeing where the lender's appetite truly lies. We started seeing that come to fruition last week. And some of these guys are doing some great common sense lending. So our new business deal of the week was with Precise Mortgages. We had a 73-year-old looking to remortgage his home, 800 grand on a property worth £3.5 million. Now, the interesting thing with this one wasn't just the fact that he was 73 years old. He was self-employed, trading through an SPV limited company as an architect. The income situation was very complex. We had to use part retained profits, we had to use his divvies, we had to use his salary. And to be fair, Precise did exactly what they said. They say on the tin, absolutely back the self-employed worker there. Came up trumps with a 2-year fixed at 3.49 for our customer, and he applied back end of last week. So great result for the guys there at Precise. So not seeing his age as a hurdle, not seeing the complex income as a hurdle, just seeing the fact that it was a great deal and a guy who probably has got no intention to let it work in, and that they're willing to back him. So well done to the guys at Precise. Completed deal, again, another real complex one. MT Finance, I talked about them a couple of weeks ago as our lender of the week on the bridging side. They funded a £1.4 million overseas bridge for us. I say overseas bridge. It was overseas national looking to refinance a property he owned in London to pay off a development finance loan that he owned on another property that had expired. And unfortunately, because the sales weren't where he originally hoped they would be on account of tailwinds of Brexit and then now COVID, he needs to raise finance. Not a lot of lenders want to do sort of high gearing lending currently, so we had to find other assets to raise the quantum from. And again, the boys at MT Finance funded that in less than 2 weeks, 1.4 million quid. So really, really over the moon with the service levels there. Never mind the fact the guy was in China and new solicitors over there as well. We overcame all the hurdles and smashed that one out of the park. So well played to those guys, Toma and Josh. Lender of the week, this stuff's selling like hotcakes right now. West One on the buy-to-let side, they've got some real great criteria quirks. If you haven't looked at the West One range on buy-to-let, then you need to do so. They're absolutely filling some gaps right now in a bit more of the specialist market and the weird and wonderful property types, and the rates aren't bad either. So West One last week were by far our most quoted lender, both on the buy-to-let and bridging side. Brilliant service from their guys. The BDMs on the bridging side are absolutely phenomenal in terms of giving you a steer and underwriter appetite, so you can hang your hat on the terms and quotes that we get from there. So well played to Danny and the guys at West One last week. Not much to really talk about other than those bits. You know, the pipeline is building. We're all getting busier, that's for sure. Thankfully, the criteria wave seems to be not as volatile. Hopefully, we can get another week's break and then have a few more changes the week after in a positive light. But yeah, not too much to talk about really. I think obviously we've got Independence Day coming up this week, which I think we're all looking forward to, and hopefully we'll see lender appetites changing as lockdown lifts.
You know, that's great, Joe. It's some great cases there that you got through this week as well. I think you're right. I think lenders are they definitely went a little bit quiet last week, whether it was the hot weather or whatever. I think we are still waiting for people to actually, the lenders to tell us a little bit more about their plans for furlough, because of course, as of the 1st of July, the furlough scheme starts to change, doesn't it? So people can go back to work, part furloughed, part work, get paid, and the amount that from August, the 1st of August, the amount that the government gives them is reduced slightly. So we've not seen lenders actually come out en masse and say how they're going to treat that income as yet. So I think when we sort of say the calm before the storm, I think we've got that still to come.
Right.
That's we've seen very few show the hand on that, and it's really complex as well, isn't it? I mean, you know, when it was furlough and you were on 80% of your wages or 100% if your employer topped it up, that was actually really quite simple because everybody was on the same. And now I imagine this is a minefield for lenders to pick their way through and to ensure that they're being fair as the furlough scheme changes month by month right until we get to October, when the end of October when it finishes. So I think we can probably expect to see a little bit more on that as time rolls by, but yeah, relatively quiet other than that this week. But some good news for Scotland and Wales at least. With the valuations. I know they've been chomping at the bit. That seems to have taken forever, doesn't it? But things will really start moving and completions happening as well in those areas, which is great.
Yeah, we're still seeing a bit of a delay. Again, you know, we've been asked previously about turnaround times on valuations. You know, we are seeing valuation, the short form vals coming in near enough on the button, the ones we have had back in. So I don't think there's too much of an issue in terms of down val just yet. The long form val, the big commercial vals, we have had a bit of a hit about 10 to 15% of estimated value on the bigger ones. But again, it's more specialist property types, so comparables are lower, and I think valuers are probably erring on the side of caution. But turnaround times are still through the roof for the short form guys because they're just inundated, waiting for that COVID backlog.
Yeah, and that's the thing. So many lenders have still got such a backlog, haven't they? And that they're trying to work through. I had one of the big high street lenders on their buy-to-let stuff. They got 15,000 still to get through. Which is just unreal.
It's worth talking about. Actually, we had a deal in with TML that they were doing both. They were doing a desktop and a physical, and they did a desktop whilst they're waiting for the physical to be. To actually go out and do an appointment on the premise that they could offer based on the desktop, and we could get the case moving subject to formal val. But actually, the desktop came back unsatisfactory and they declined it. So there's just a lot of moving parts right now, and there's a lot of things we've all got to get our heads around in terms of layering and complexity. And I think the sooner we can all get back to normal and write business like we did in February and so on, the better, I think.
Well, listen, it's all not all bad. At least I'm going to the pub from Saturday. That's
hey, tell you until it rains.
Yeah, exactly. Yeah, as long as it's sunny.
Yeah, exactly right. Well, listen, any questions? Have we had any questions this week, Nick?
I can't see any yet, but we'll have a little look. So if anyone's got any questions, if you want to post them in the chat, and me and Joe will try and answer them as best we can. I think we are. We might have stunned them into silence this week.
Great, it's good. We haven't had any questions on politics this week for a change. That's really nice.
No, that's good. It's. I think that's the thing, isn't it? It's everybody's just still waiting to see it, and I actually think that our industry have reacted fantastically and recovered really, really well. I mean, this could have really knocked everybody sideways, but it's not, has it? It's people have really sort of lenders stepped up, brokers kept on going. We had, just to give you an idea, we've had this is individual subscriptions to Knowledge Bank. This is not including sort of big firms or anything like that. We had 100 individual advisors that have subscribed, new subscribers in June alone. That's crazy.
Amazing.
It's
amazing.
Fantastic.
It's amazing.
It's fantastic.
Yeah.
And that's still in. There's a bit of uncertainty going on, but 100 new brokers subscribing to Knowledge Bank. Just phenomenal.
We've had a lot of new brokers in at Crystal as well, to be fair, and we're looking at our stats so far for the outturn. Obviously, with month end to come 2 days time, and we're actually only 85% of where we were in Feb in terms of new biz apps and inquiries. So. We've gone from the real sharp lull, and we seem to be working our way back out. We just still need to be turning it into more and more fundings. That's that's where we're at now after having rebuilt the pipeline.
Yeah, and of course, talking of funding, there's still a few significant specialist lenders that we're just waiting to hear news on, aren't we? And we've, as yet, nothing. We've not even
zero.
We can't even give you an idea, can we? Because we've just not heard anything. So.
No.
So yeah, that'll be an interesting KickStart webcast when that happens.
Yeah, I think some of the players who've withdrawn and perhaps haven't returned just yet, they're just sorting out their own issues in terms of the massive back books and making sure that those customers are looked after, that requesting payment holidays as a priority, and that's the right thing to do by the business really. Absolutely makes sense. Don't give yourself more headaches at the front end whilst you've got something at the back end. So don't stretch yourself on that front. And I think, absolutely back their decisions, although we could do with them right now because there is a fair amount of pent up demand for sure.
Yeah, no, they are missed definitely, but I agree with you, Joe. They're doing the right thing, and the right thing by themselves, but by their customers more importantly. And I think that's fair play to them for that. Absolutely.
Yeah.
Right. Do you have any questions, Joe? So I think
amazing
for this week. So so have a fantastic week, everybody, and we will look forward to seeing you next Monday morning.
Yeah, stay safe.
Thanks, Joe. Take care.
Bye, guys.
Bye-bye. Bye.